Well, this really is an economic blow. A Reuters poll suggesting that the economy would decline by 0.1%, but of course here the figures were down by 0.2%. That is on a quarter-on-quarter basis for the period between July and the end of September. If we look at it year-on-year compared to the same 3 months last year, the economy contracted by 0.7%. Of particular concern, agriculture, forestry and fishing declining by nearly 10%. Let's find out what's going on. We're now joined by Elna Moolman, Standard Bank economist. Elna, thank you for being with us. As always, generally, are the chickens, like power cuts and logistical constraints and all of that, coming home to roost here?
Absolutely, and I think that's really the crux behind these numbers. So firstly, when we think about the quarterly momentum, then we should think about it as the load shedding really increased significantly from the end of last year. And the first and second quarters of this year, the expansions that you've referred to, was really just rebounding after that severe hit from load shedding. And so now we've seen a little bit of a rebound, and essentially the economy is just stagnating. Or if we take a longer term perspective, then if I look at where we're now relative to prior to the pandemic, then we can clearly see a distinction between the momentum in the goods producing sectors and the services part of the economy. In other words, your goods producing sectors combined, so mining, manufacturing, etc., is really just stagnating, very flat. And that makes sense if we don't have electricity to be able to grow volumes, whereas the services sectors are a little bit less directly affected by the infrastructure constraint. I've focused a lot on load shedding, but of course, you've already referred to the logistical challenges that we've seen from the second quarter in particular.
Are you worried about agriculture or surprised by the drop in agriculture? I don't remember that being a huge concern in the run-up to today's numbers. In fact, some saying agriculture would be looking okay or pretty good.
Yes. So the sector tends to be a little bit volatile. Sometimes we have the harvest a little bit later, etc. Although the typical volatility is now exacerbated by, significant changes in weather patterns. And so from that perspective, we are somewhat concerned about the longer term outlook for the sector, given climate change and the increased frequency of weather-related disruptions. But if I take a longer term view, 5 to 10 years, for example, then whether I look at it from a production perspective, so GDP, or an export perspective, we've actually done quite well in the agricultural sector. So that is the one sector in which I'd say we're somewhat concerned about these exogenous factors, weather that we can't control. But the longer term story has actually been reasonably positive. Whereas if I think about mining and manufacturing, for example, then yes, it was weak in this quarter, but the bigger concern is it's at best flatlining at levels well below previous peaks. And it was, again, the outlook just isn't great there. If we think about the infrastructure constraints, even in the next couple of quarters or in the medium term.
Yeah, and of course, with mines saying they're shutting down certain projects, we're getting a lot of that news of late. So are you suggesting we could see another contraction and head into a recession? Is there a danger of that?
There's probably always a risk of that happening, although that's not our expectation at this stage. Our expectation at this stage is really just that, in particular, the goods producing sectors are going to trend sideways. In other words, I think the mines are working very hard to find solutions for these infrastructure constraints, or at least assist the government in finding some solutions and improving the situation. So from an electricity perspective, we're very encouraged by the very strong private sector response in terms of investing in energy-related capex goods, in other words, solar panels and batteries and so forth. And so I do think into next year, the impact of load shedding is going to be even less on economic activity. But on the transportation side and the logistical challenges, we think that we're at the beginning of the process. So we're probably there where we were in electricity, let's say 2 years ago. In other words, the right conversations are taking place. Government is clearly prioritizing emphasizing this. The private sector is, decisively supporting government in finding solutions. But unfortunately, it's probably still going to take another 12 to 18 months. So on the one hand, we'll probably see less of an impact of load shedding, but unfortunately, the logistical constraints are probably going to remain quite severe. And so the outlook is basically then one for most of the economy really just stagnating. We do think that there will be some cyclical support next year. So we think inflation will moderate, the Reserve Bank will start to cut interest rates. We could ultimately see a little bit of a growth revival globally. And so perhaps at least from a cyclical perspective, it becomes a little bit less dire than it was this year.
All right, but like you say, we can't expect great shakes for a while. I mean, what's the bigger picture here? When growth data doesn't match sort of population growth, we say that South Africans are getting poorer. Now we have a contraction. We have a huge unemployment crisis. Is it fair enough to say those things leading to even social ills are going to get worse?
We are concerned about that. So on the one hand, the positive side of the story is in electricity, for example, we've had the reforms. It took a while, but we can clearly see the impact of private sector investing in some generation capacity, etc. Now we're dealing with transportation. And again, it will take a while before we see an operational improvement, but at least the right reforms are taking place. And so I'd say this year is going to be particularly difficult. But we do think that from next year onwards, growth will accelerate slightly. Again, not spectacular, not enough to reduce unemployment and poverty and the fiscal constraints. But we should at least get to a point where growth is enough for some of these metrics to stabilize. In other words, so that we're working towards stabilizing unemployment, stabilizing government's debt levels, etc. But the concern is absolutely that we're not growing the economy quick enough to naturally reduce unemployment. And as we all know from a fiscal perspective, that means that we then have to provide some social security net, and we have the social relief of distress grant, and that will continue. But we really can't afford from a fiscal perspective to do even more. And therefore, it is absolutely critical to make sure that we at least accelerate growth enough to stabilize some of these metrics, so that we say we can afford the current grant system, but we're unable to do more. And therefore, it's critical that the economy has to do more and absorb the excesses that the fiscus simply can't directly support.
All right. Thank you. We appreciate your time. Elna Moolman, economist from Standard Bank, after that even worse than predicted GDP number coming in for the third quarter of the year.